Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about KemPharm Incorporated, traded at Nasdaq, ticker name KMPH. Well, KMPH today was trading really high. You can see it was doing 27.05% during the day, and after hours we see already minus 2.77, which is in general nothing and still could be volatile around zero because it's still on this huge growth. It's just within the volatility ranges. And what is most important to note here, we need to keep this in mind all the time, that the market capitalization for KMPH is very, very small. It's 227 million company. Speaking for farm company, it's actually nothing. And this could be the reason, and it is the reason why enormous volatilities could be and are taking place for KMPH whenever there is any upwards or downwards move. And you can see this starting from all the way from actually by mid of June, July, start of the growth where we were around $3, and then we went all the way till 22 almost plus by mid of November, and then we returned all the way to 5 and again went all the way to 18. You can see by beginning of March. So these enormous volatilities and also today's start are really big, and they can be continuing. And then the question is, of course, how to trade here, how to catch the wave, because this stock is very wavy. And if you know how to play here, you can really make a lot of profit. So this is we will do now. We will analyze KMPH. Before we start, as always, we have three moving averages here depicted. These are moving averages 20, 50, and 200. Here on the left, you see their legends depicted, being green, blue, and red line correspondingly. So if you look at them here, you can see that recently, after having some waves of moving average 20, 50, and moving average 200 following, we experienced a major decline in the period from mid of December all the way until mid of January. And now we are in the recovery sequence. And of course, correspondingly, according to the recovery sequence, we also see that moving averages are about to boost. They are going upwards. Moving average 20 is going upwards with acceleration, so its second derivative is higher than zero. The same is true for moving average 50. It's just in the turning point. And the same is true for moving average 200. So everything is about to accelerate. And also, if you look together with the price action that took place by beginning of March, where we went to all the way to 18 here, we are forming kind of a U shape, and probably it will be cup and handle or a skewed W. So something like this we could expect, and here we could make profit on. So with this being said, let's clear the chart again. What we need to understand is also that still some, let's say, intermediate correction might take place, because today's candle, if you look at it here, yes, it's a white candle, but there are some upwards and downwards shadows. Especially upward shadow is reasonably big, so it means that tomorrow we might have some volatility. And if you look and you ask yourself what the volatility might be, you can clearly see it might be actually between the levels of course, the current price action, which also corresponds to historically formed very strong kind of resist volatility level here. Let's call it V1, and also between 11, where $11 is also very strong volatility point that was formed historically here during the later actually half year. Why is it important? Because this would be the first entry where you could enter on this small recap before further growth. Similar situations took place also, you could see, by 8th of February here. Similar situations you can see all the way actually on this big growth. Similar situation was happening in September, by beginning of September, etc., etc. So always when you have this big upwards candle with reasonably big up and downward shadows, you could expect some volatility. And here also it is supported with the levels of V1, V2. So with this being said, that would be the level to enter first time here in this stock. Let's write it here. So this would be the first entry between 11 to 11.95, and this would be immediate buy. What does it mean? It means that the funds that are dedicated for this channel, you could start immediately once you touch 11.96, but then you need slowly enter actually through the channel. Still, as I said, this is very volatile stock, so volatilities could be there. So you really need to be prepared for averaging down when needed. And still on the very big spikes, this candle also, this chart, this stock can also make kind of flying dragon style or very big downward shadow style candles. You see them also appearing all the time here and there, like by end of September. You can see by second half of December, etc., etc. So you can find them many here and there. So this means that you also need to be prepared for lower average down if the price would just drop on volatility. And with this being said, of course, the next level, if it declines, still would be within, let's say, the expected kind of volatility waves, because also, as I mentioned at the beginning, the stock is incredibly small market capitalization. So this would mean that it could really volatile a lot. Therefore, the next level of volatility, the next channel to enter will be this one. Let's call it S1, S2. And actually, this would be the channel between, we can say 740 to actually all the way just between moving averages 20 and 50 at the moment, which will be also very strong support level till let's say almost 890. So let's write it here. This will be therefore 740 to 890. Yes, the channels are quite broad, but also volatilities are broad, so we need to take it into account. Then, of course, we need to take into account possible negative catalysts. That we also do at our channel. It's part of our mixed analysis approach, where we take into account actually technical analysis, non-linear averaging down. That's what we discussed now. But also we take into account possible negative catalysts that might kick in, which is not expected, but if it happens, the stock could drop really strong. And especially, again, keeping in mind that this is a very small market capitalization company, any bad news could be really strong. Therefore, we really need to take the principal level of support. And if you look, what would be the principal level of support? Of course, you can clearly see this is the one formed just about 5. It was also holding strongly during the previous decline, the drop of the stock. So this should be therefore a very strong lower part, and the higher part would be at 6. So this would be kind of a final stand for this position, which is S3, S4 level, and quite easily seen and actually simple final support in case if we have any negative catalyst kicking in. So therefore, let's write it here, would be between 5 and 6. It's not that we predict it's going there. So some people ask us why we predict the price goes that low. No, it's not a prediction. It's a strategy of mitigating the risks. So it's a risks mitigation approach. Because also what is important here to note, and still this would say that there is still some volatility downwards as possible, it's the volume traded today. You see the volume, it's much higher than the average. It means that shorts might be engaging tomorrow, so the price could still a little bit go down. Of course, not expected to go lower than S1, but still we need to be prepared. So with this approach, we'll be quite well prepared. And if it will be bouncing back immediately at the channel of V1, V2, then we might have kind of a cup and handle formation. Anyway, in both cases, we know how to engage here and will be quite safe trade with all risks, major risks mitigated. So with this being said, that will be the numerical card to play. If you are more for graphical representation, you can look here, just make a screenshot of this one. And speaking of how non-linearly average down, it's still quite positive. So it's still a classical 1-2-2 approach. What does it mean? It means that the funds that you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. You can average down with 2 portions in the second channel. And should the negative catalyst kick in, then you can again average down with 2 portions in the last third channel. And this is really important part of our strategy, because while other, well, let's say some people are taking the strategy which is including, let's say, stop loss or taking loss, cutting loss, here we try to trade until the end with a positive outcome. So we are not discussing, let's say, stop loss, this kind of initiatives. No, here we go really to the final possible support. We enter in, we engage. It still might take a little bit longer time, but the outcome should be positive, either neutral in the worst case. So this kind of an approach we, let's say, pursue in our mixed analysis at the channel, in our opinion videos. So with this being said, that's actually all for KemPharm Incorporated at the moment. Good luck with it. Also, please don't forget to subscribe to our channel for the first time watching this video. Also, please press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.